You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. If you're paying $0 to trade options, you're paying too much. That's because at public.com, you can go a step further and earn rebates on every single contract traded. No commissions, no per contract fees. That's table stakes. When you place an options trade at public.com, you not only don't pay, you earn a rebate. And those rebates can add up fast. Public is the only options trading platform where you can earn rebates. You literally won't find a better deal. So, switch to Public and start getting rebates on every single contract traded. Or stay with your current options trading platform and leave money on the table. The choice is yours. Public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back one final time here for the penultimate trading week of the mad, insane year that has been 2024. And also the final time for this show for the mad trading year that is 2024. By the time we come to you this time a week from now, we will be in a brand spanking new trading year. How crazy is that? Doesn't seem like, in many regards, that 2024 should be done. In other ways, obviously, it seems like it dragged by interminably at some time. So a wild year. I hope you're having a good end to your trading year. Hope you're having a good holiday season, spending some times with friends and family, getting away from your trading screens a little bit out there. I know we did this week. It was kind of refreshing. No option block, no TWIFO yesterday. Not dragging people in to the network, make them come in the day after Christmas. I'm not a monster, listeners. In fact, we're running pretty light today as well, letting folks have a little bit of a holiday season to enjoy out there. But nonetheless, vol waits for no man out there, so we won't keep it waiting for much longer. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you have been binging this year. Allow me to thank all of you who've continued to make our network just the beast, the juggernaut that it continues to be. Coming up in January, it'll be 18 years, my goodness. That is wild to say out loud. I've been doing this podcasting thing for a while. And you know what? You folks seem to like it. So I don't think we'll be stopping it anytime soon. And of course, if you like what you've been hearing all year, make sure you spend some time thanking the folks who support the network, who keep the great content coming to you throughout the year, like our friends over there at public.com/VV. It is literally the easiest landing page we've ever had to promote, maybe in the 18-year history of this network. Public.com/VV. We said to them, hey, are you ready for the hordes of hardcores that are going to come to you from Volatility Views? They said, yes, we're ready. We can handle it. So Put the proof to them, folks. Head on over there, public.com/VB. Hey, maybe you get paid a rebate to trade some vol while you're at it. Not the worst thing in the world, public.com/VB. We thank them for being big supporters of the network throughout the year. As we roll on out, also our friends at UVX, make sure you're checking them out over there, UVX.com/VSTOXX, the place to go to learn more when when you want to expand your repertoire a little bit beyond these shores. UVX.com/VSTOXX, the place to go to learn more. And who's joining us? Who's holding down the UVX hot seat for the final time of 2024? Let's find out. It's our old pal, Mr. Steve Sosnick, the head options strategist over there at Interactive Brokers. Mr. Steve, welcome back. You get the pride of place of being the final UVX hot seat guest of 2024, sir. How goes it?
It was great, Mark. Happy holidays. Great to talk to you. And excited and honored to be wrapping up a year in volatility, such as it was, or lack thereof, such as it was.
And how is the year going at IB and in Sosnick land, sir?
I think in both lands it's going quite well. I think personally, it was a fun year. Professionally, I think as a firm, we had a very exciting year. We got involved in forecast contracts. We started something called the Forecast Trader, which got going just in time for the election. That became a very popular platform for us, and it continues being able to basically essentially binary options on a range of economic and climate related type of numbers, and just in general. Customers have been busy, as I'm sure I don't have to tell most of the listeners.
Yeah, you had some good timing with those binaries. I think one or two people may have noticed that this year. So interesting. People will be interested to see that. Of course, it is still going. There are other products outside of the election. The election may steal all the headlines, all the thunder, but there are some other products lurking around out there. You could check it out over there at ForecastEX if you are so inclined, listeners. Meanwhile, we are inclined to review some vol, so let's get to it with our final volatility review of 2024.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do what we've been doing for nigh on an entire year here. Of course, the mad year that was 2024, and indeed hasn't quite been 18 years for vol views, but it's been quite the run, over a decade of this show alone. Dare I say it, the gold standard in the world of vol talk out there. And coming into the end of the year, listeners, we're seeing a little bit of red on the screen. Is it possible? Is it possible to have bullish fatigue finally to end this year? I guess we shall see, listeners. Right now, we are seeing the bulls just kind of exhausted. Obviously hard to read too much into any real market action this week. I think to call these markets thin is to put it mildly out there. But still, nonetheless, we are seeing quite a bit of red on the screen out there in our final vol view session, at least for the year. Obviously, a few more sessions next week before we wrap this thing up officially. We're seeing the NASDAQ leading the charge to the downside right now, off nearly 2%, about 1.95%. S&P hanging out close to 1.5%, about 1.45% right now. The Dow off about 1.1%. And you know what? Small cap saying, hey, don't forget about me, off a full 2% right now. So they are taking a whole bunch off the top out there across all of the major indices out there today. Of course, our old pal VIX Cash kind of been vacillating throughout the day. As we kicked off the show, it had managed to rally up to about 18 even. That puts it up exactly a point from where we were a week ago. As we kicked off the show here, we've seen vol start to come back in as we're heading into the weekend here. So we're seeing it more threatening a 17.5, so already given up half a point, which is kind of interesting. We'll see if that trend continues, if we, by the end of the show, get unched in VIX cash or maybe even back down on the week. It will be interesting to see out there. And our old pal VVIX, we were just talking just last week and the week before, a lot of juice getting back in the market. VVIX getting very frothy, 127, 130 in that ballpark. Given pretty much all that back over the last week and change, just down another 10 points from where it was this time last week. We're still at a 106, so still north of triple digits, which is, of course, a level we should be paying attention out there, but back off, retreating off of these extremely lofty highs that we saw it hit immediately after Powell lit this market aflame just not too long ago out there. So a lot to unpack. We'll get to all the fun looking back in a second, Mr. Steve, but before we get there, it is our penultimate trading week of the year. It is our final vol views for the year. What stands out to you from this final vol views trading week, sir?
I guess the key here is, just the way I entitled a piece that's going up on the web, almost, should be up about now on IBKR campus, is just because the Santa Claus rally shows a statistical likelihood doesn't mean that it's a rock solid certainty all the time. You can't just bank on the fact that because it works most of the time, that it's going to work all the time. And obviously we're only halfway through this period, or a little bit less so, depending when you consider the end. But certainly we've given back what we gained on Tuesday, and then some a little bit as we came on. So I think it's one of these reminders of don't get too complacent. It's easy to get complacent. It's easy to assume that markets just continue to rally. It's easy to assume that, that every dip is a buying opportunity and that every rally should be chased. But if it works, just because that may work most of the time, and it's certainly been working this year, doesn't mean it's going to work all the time. And it doesn't mean it's going to work all the time going forward.
And it's funny. It's hard to fault some of our newer listeners for having that exact mindset, Steve, because you're right. For the better part of the last half decade, that has worked spectacularly. Every dip was a buying opportunity. Every bit of red was an opportunity just to add more to your portfolio. And they all pretty much worked out, with the exception of 2023 out there. So yeah, interesting times out here, listeners. A lot to unpack across the board. Speaking of unpacking things, Steve, we're going to have our big look back on 2024 next year, as well as our look ahead to where we think vol will be next year. So stay tuned for that next week. Should be a banger. We had a litany, a who's who of people weighing in on our annual vol prognostication game. This time a year ago, we'll go pay off some of those. We'll also round up some new prognostications for this time into next year. What does the future hold for us on the vol perspective? What did this past year really look like from an overall vol perspective? We did, after all, have some pretty large catalyst events this year from a vol perspective. So we're going to break all that down in a lot of detail a week from now on the show, the first week of the new year. But Steve, you won't be joining us on the show a week from now. So I'm going to cheat, give you a chance to do all that fun now. Obviously, a tumultuous year from a vol perspective. We mostly had vol coming in, but we had a few really seminal moments that really seemed to drive vol into another level. Of course, August 5th meltdown springs to mind. Call it what you will, the yen carry trade over the weekend, whatever you want to call that sell-off. Of course, Powell very recently. Of course, all the madness leading into and coming out of the election. There were a lot of interesting events, a lot of interesting catalysts. When you look back at the volatility year that was 2024, Steve, what really stands out and resonates to you?
I'll break it into two parts. The first half of the year, volatility more or less didn't exist. It was just sort of the usual grind higher. I think we had one spike in April around earnings season, but when I say spike, I don't even know that we made it up to 20 for any length of time. To be fair, that has changed in the last 6 months. I think the events of August 5th were a reminder that volatility can and does come back. We've had a couple of, as I'm looking at a chart here, we've had 5 times in the past 6 months where we had vol, sustainably may be the wrong word, but just, spikes where where we were above 20 for a couple days at a time. Vol does tend to be mean reverting, unlike stocks themselves. So it is fair to see it, not sustained for long times above 20. But I think there's been a little bit more healthy respect for the fact that we can have some volatility coming back in. To me, also, what's very interesting is the skew index, which is not necessarily my favorite index of all time. I mean, it's got some flaws here, but the skew index has never been higher, never ever, not even close, and it's been going up pretty much continuously for the last few months. So that's telling me that a lot of people, even if they're not necessarily banking on at-money volatility, they're definitely looking for protection through S&P puts, below market puts. And I wrote a piece a couple of weeks ago. I called them Schrodinger's puts because, relative to at monies, let's say 10% out of the money S&P puts were about as expensive as they'd been in quite some time. On the other hand, from an absolute level, they were actually relatively low priced on a longer term basis. So I think people have kind of caught on to the idea of maybe some insurance is not the worst thing. Maybe on the other, it may just be sort of, all right, I'm going to buy the markets, hold my nose, and buy a little protection. But I do think that's been the change, let's say, in the last few months.
I have to admit, I didn't have the skew index on my bingo card for you, Steve, because I know you're not a fan of it. Most of us here are not a fan of it for obvious reasons. We've illuminated that many times here on the network in the past. Listen, but you are correct, sir. It has been quite the wild ride for the skew index, especially, as you might imagine, post-election. Listen, now you've heard us talk about the skew index in the past. I'll leave my issues with it aside. It's obtuse, methodology. It's weird nomenclature. 150. It's all sorts of issues. The fact that it's close to close. Forget all that. But post-election, immediately post-election in that rally, we got down to about 141.5. Looks like the low for the year was actually 127.31. Coming, guess when? July 30th. About a week before that big meltdown in the S&P. So that's kind of interesting timing right there. But of course, we hit a pretty low level back on November 11th as well of about 140. Now, if you know about the skew index, when it surges north, it tends to top out usually 155, 160, maybe 165 is kind of wild time. But we're at 173.75 right now. And earlier this week, again, take this week's levels with a bit of a grain of salt because we are very thin, but we hit a 180.09 earlier this week. So, Steve, you are indeed correct. I can't recall ever seeing a 180 handle in the skew index before. Now, also, again, one of the other problems with the skew index is we don't really know what's driving that. There are two moving parts being aggregated into one number after all. But I think, like Steve did, it's fairly reasonable to intuit that it is the put skew that is driving some of that. So, Steve, as you see that, does that make you think maybe we're looking for a little bit of turbulence, maybe a little bit of downside, dare I say it, a little bit of red on the screen heading into 2025? I'm already screwing up my dates, Steve. The new year hasn't even started yet.
I don't know. Again, I don't want to read too much into it because also, again, as you say, we're aggregating two numbers. So you could actually, at the same time, you got people banking on the continuation of the rally. But, one of my, I do think that, let's say, the Warren Buffett mantras are fairly reasonable to keep in mind here. And one of them, of course, is be fearful when others are greedy. And I think there's a lot of greed out there. I was on one of the networks earlier this week, basically, saying that one of the things that has me a little bit spooked, and I don't do price targets explicitly because my firm doesn't allow me to do explicit recommendations, and that falls under that category. I can't do buy, sell, hold. I can't put numbers on them. But one of the things that bothers me is pretty much every price target is higher. I think there's one guy out there who's looking for lower, and everybody else is somewhere 7 to 20% higher. That pretty much means that the everybody's kind of on one side of the boat to a certain extent, and that's when surprises happen. And so I do think it's reasonable to be a little bit nervous. I wrote a piece for Barron's called about a month ago. I think it ran early this month. Of don't fight the tape, but insure against it. And that is basically saying, look, the momentum is so strong right now. It's tough to just sort of go outright short. It could be expensive, but although I think it's less worrisome than it was a couple of weeks ago. But at the time, downside puts were not particularly expensive, and I think that's a way to roll with them. My thesis at the time was, go out and as much as I kind of abhor paying for time premium, for that readership, I was basically saying just pick the level that makes you nervous, whether that's 5% down, 10% down, 20% down. Be honest with yourself, of course, which is hard to do. What would make you angry if it went down that much? What would make you upset? And basically buy puts with a strike slightly above that, but go out 3 months, because I think the problem is we've all fallen in love with very short-term options, and for obvious reasons. But I don't think they're as effective as a hedge unless you're really, really paying attention. And also, you're buying the worst part of the decay curve. One of the first lessons I learned as an options trader was decay falls off a cliff as you approach expiration. And so you're literally buying, the options that decay the fastest. So my thought was buy them out a couple months, 2-3 months, and then roll them in about 30 days or so. So you're actually not giving up as much in decay, even though you're paying a fair amount of time premium for the insurance. So that's kind of my thinking right now. Is I think there's a lot of unknowns out there. There are always unknowns out there, but I think considering we have a change in administration, you've got potential big changes in fiscal policy. Powell basically told us that don't count on monetary policy doing the same thing we've expected all along. Those are some things that you might want to be cautious about. And that's why I do think that, everybody likes to buy low, buy the dips. Why wouldn't VIX be one of those things you buy the dips in?
Well said, sir. And if that skew index number, listeners, is giving you a little bit of caution, a little bit of concern, you want to maybe dig a little bit more, I'll give you a couple of ways you can do that. One great free tool. One's going to cost a little bit, because again, the skew index kind of hard to read into exactly what's driving that one number. We talk all the time on our This Week in Futures options show about our TWIFO reports for a reason. A, they're great, and B, they're free. So head on over to cmegroup.com/TWIFO, TWIFO. Free plug for them, because these reports are great. And once you do that, listeners, you'll go in, look at the S&P 500, and you can pull up exactly where the skew is across the entire term structure. And you can also see how it's evolved just recently. It's a this weekend, so it'll show you how much the skew has evolved over the last week. If you have the premium version, you can go back even farther. Let's go out, let's say, 3 weeks. How about that? A nice time span out here. We're seeing pretty much 22% premiums to the vol across the board, which is pretty rich. That's up from about 14.5% a week ago. So just in the last week, again, a thin week, so read into that a little bit what you will, but still, that put premium very much ticking up. So obviously showing you that skew index juice is coming from the puts. Now the calls are getting a little bit cheaper as well. The calls were 12% cheap this week, 17.6% cheap. So that's also going to feed into that skew index number as well. Just something to bear in mind, but the puts are definitely juicy. You can also check out our buddy, obviously, over there on the option block. No OB yesterday, but the Flowmasters tools over there at Trade Alert, obviously great tools as well. All the skew info you want out there. And right now we're hanging out 30-day skew in the SPX. We are hanging out at about a 36%, which if you're wondering where that falls on the past year, that's about the 86th percentile. Now, bear in mind the top of that list, 49.4%. And again, that skew is all driven by the put wing at the end of the day. That number is August 5th. That's nearly a 50%. So I'm sure if we take that outlier day out of there, this current skew level would probably be even higher for the year. So something to bear in mind out there as we're looking. If you're wondering what was the low for skew for the year, by the way, listeners, it was February 23rd, only 13.2%. So that's our skew range for the year. The low, February 23rd, 13.2%. The high, August 5th, 49.4%. Right now we're hanging out at the 86th percentile, 36%. So just a couple of easy ways you can do a little bit of digging yourself if you want to dive into some of those skew index numbers as we dive ourselves into the volatility surface. And coming into the start of the show, listeners, surprise, surprise, the vol surface, the vol futures were looking lower than they were a week ago. In fact, looking at the board right now, people always like to know, is there a 20 handle anywhere in the offing? And this time a week ago, we could maybe get within spitting distance of one, especially if we went all the way out to, let's say, late summer, which sounds weird to say. The dog days of summer are high for the year, but that's where we're looking on the term structure. At least a week ago, the August contract, again, that's forward looking, so that's going to look into September, which is why it's a little bit juicier, but I digress. 1980 is where we were this time a week ago, so within at least range of a 20 handle. This week, not so much. The loftiest future on our board is the September contract at a 19.1. And the front future, that Jan future, down nearly 1.4 points on the week at about a 17.35 when we kicked off the show. The Feb future down about 1.15 points at about a 17.87 when we kicked off the show. So kind of a term structure you might expect heading into the end of the year. Steve, anything catching your eye on the volatility surface this week, sir?
I mean, we had sort of gotten backwardated, relatively recently, on the volatility surface. So I think the fact that, it's I'm not going to say it's completely normal actually, but it's close enough now. I think that, that's the part that I'm sort of looking at here is we did flip very quickly from, as these things usually do, from contango to backwardation, then back to contango. I think it's reasonable to expect that. I do think it's a little interesting though that considering, the change, considering that we're now sort of within 30 days of the inauguration, that volatility remains a little bit light. I think volatility traders tend to price in a little too much of the short term and not the full 30 days that goes into VIX. Because, when I think about it, I don't want to put too much on it. I certainly don't want to get political because that's not at all my intent here. But, January 20th is inauguration. That's also it's also a market holiday for that matter. It's Martin Luther King Day, so we're closed. And then you have, so you have the potential for all sorts of first day type of executive orders that could change the economic picture, whether it's tariffs, whether it's immigration policy, et cetera. And the market may or may not think benignly about those things, depending on what comes down the pipe. And then we get into earnings season shortly thereafter. We're pretty much 30 days. We're in the 30-day window of the next earnings season. Not the whole meat of it, but certainly the early innings. And one of the things that, again, we have to consider is one of the reasons why so many are so optimistic about the coming year is that S&P earnings expectations, and I'm going to round the number, are roughly 15% higher for 2025 over 2024. That's a great number. But two things come to mind. Number one, how much of that is priced in already? And number two, let's say we get 2 to 3% inflation, 2 to 3% GDP. So that's kind of your 6% baseline. Where does the other 8 to 10% come from? Now, it's always a fool's errand to bet against the creativity of corporate management. But what it means is we are highly susceptible to any shortfalls in guidance. I mean, think about Micron, last week, a little bit short on guidance, down 18%. On the flip side, Broadcom was rosy about their guidance. Now, God bless them if they can reasonably predict out to 2027, but market is going to be really hinging upon what companies say about guidance. So I think the idea that we just sort of have that the holiday quiet period continues into the period that is covered by VIX might be a little bit sanguine.
And what's going on the international volatility front? Well, I think it's time to find out, listeners. It is time for the International Volatility Review.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX.
All right, everybody, welcome to our final international volatility review for the mad year that was 2024. And coming into this final vol views for the year here, we're seeing VSTOXX giving up some of its lofty perch from this time a week ago, but not a ton, off almost 0.6 from where we were this time a week ago, about 0.57 coming in to the start of the show. VSTOXX closed at 16.27 out there right now. So kind of interesting given everything that's been going on overseas and everything that's been going on domestically to see the way VSTOXX has performed next to VIX over the last few weeks of the year. Obviously different catalysts driving things over there versus here, which has made watching these two products so interesting over the last month, in particular post-election here, and given everything that's been going on the domestic front over there in the Eurozone. Of course, our range for this mad year of 2024, like we said with the skew, our high for VSTOXX also came on August 5th, 31.16. So almost 2x where we are right now, listeners. The interesting thing, and again, feeding back to what I was just saying about some of the interesting developments in the Eurozone right now, is we are not at our 52-week lows for VSTOXX, which we were at pretty much exactly a year ago. That's when we said it. December 15th of last year was when, of course, we saw VSTOXX hit its low for the year of 12.12. Not quite there, like I said, right around 16.25 right now. So still a little bit frothy compared to where we would expect to be seasonally. We also did kiss it and threaten that level again back in March of this year, which was close to that February timeframe I was talking about earlier, where we saw the skew for the S&P also hitting its low for the year out there right now. It's been a lot to unpack. Of course, we've been talking with our buddy Dr. VIX throughout the year about all the fun trades and flow we've watched out there and all things VSTOXX. I believe he is doing a webinar about all that fun when he comes back from his global jaunt in the first week of next year. So look forward to that. Should be some interesting data points. We'll get his thoughts on kind of the year that was VSTOXX coming up in the show next week as well. But before we get there, Steve, you folks over there at IB are kind of the domestic outlet. Dare I say it, the go-to source for folks who want to sling a little VSTOXX here in the U.S. So catch us up. What are you seeing going up over there at IB? And what are your thoughts on some of the flow and some of the activity and how VSTOXX is performing vis-a-vis VIX coming into the end of the year here, sir?
Well, I think first of all, you can dare say it. I mean, if you're, if you're an individual or a small institution, we are probably if not the only, certainly the destination for access to VSTOXX. So certainly, this is one of the reasons why I'm always happy to participate in discussions about this, because it's a meaningful product to us. It was fairly sleepy so far this week because why not? It's Christmas. A lot of the continent, they're even more assiduous about taking vacation than we are. But volumes, for VSTOXX are up pretty solidly. Kind of about 17% for the futures, and I think 40% or so for the options. So those are big numbers. So there is a lot of take up on these products, and I think, I think there's a reason to pay attention to this. Because, for the comments I made about like tariffs and things of that nature, Europe, again, you've got a multitude of political situations, none of which are particularly, I shouldn't say none of which, but certainly two of the biggest ones are Germany and France, and those are, fairly fluid political situations, to say the least. And then, again, throw it. I mentioned the part about tariffs before. There was an article, I believe it was Wall Street Journal, about, various manufacturers around the world trying to get stuff to the U.S. before the potential of tariffs. They interviewed, some guy who makes, who's a Riesling wine producer, which, happens to be I read carefully because that's my favorite type of wine personally, is Alsatian Riesling. There's definitely something to be said, for the fact of geopolitics playing on Europe. If we're doing things geopolitically, it does have reflections on them. And again, how does the situation in Ukraine get resolved? There's a lot of other things. So I would not sleep on European volatility. And yeah, of course, that sounds self-promoting if I'm saying that we're the place to, don't sleep on it. And by the way, we're the place to trade it, Interactive Brokers, that is. But I do believe that I started my career in international equities and then international derivatives. I was trading foreign warrants, among my first orders of business. And so I've grown up in this, and I think while the U.S. continues to draw both attention and resources and money, I think it's fair to say that do not ignore the rest of the world. It's a big, wide world out there. Europe is certainly a place you can't ignore, and I think that's why I pay attention to VSTOXX.
Well, like we said, Steve, that's one of the reasons we have you on here is you folks are kind of the go-to outlet for slinging a little bit of VSTOXX options over there. We've been talking with our buddy Russell for a while about some of the interesting flow that's been going up out there in VSTOXX. We have noticed a few interesting trends, like I mentioned, kind of some size 1x2 put action, which is not a trade we see go up a ton out there in VIX land, which was kind of interesting. And so I'm curious from your perspective as you're watching the customers trade VSTOXX throughout the year. Have you noticed any interesting differences between what you would traditionally see in VIX versus what you're seeing in the VSTOXX trading, or is it more or less shaping up along similar lines, Steve?
I think overall it actually shapes up that this, certainly among our domestic traders, I think they approach it very similarly to the way they approach VIX. They use similar types of strategies. Obviously, you're going to have everything. You're probably going to have some people spreading VIX versus VSTOXX as well, because they do tend to move. They certainly don't move in lockstep, but they rhyme, let's say, more often than not. And I think in general, similar types of strategies can be used in both. So I think, it depends on the user. Some of them are hedging portfolios. Some of them are speculating, either on a bounce or a mean reversion. And so I do think that I think what in many ways works for a lot of people who get into VSTOXX as opposed to VIX is that it is that you can think about it in a fairly similar. In terms of the actual trading, you could think about it in a very similar way that you would to domestic volatility products. Although, of course, the catalysts are not exactly the same.
Well, Steve, you'll be happy to know I'm looking at our chat here, and we have a lot of our live listeners saying they use IB for that very purpose, to trade some VSTOXX. So there you go, Steve. You're luring folks to the dark side. At least
we consider it the light side.
There you go. The light side,
okay.
The dark side. Call it what you will, listeners. Glad to see you're slinging a little bit of VSTOXX. An interesting data point, even if you're not a big international vol fan, just something to watch heading into the new year here. Of course, we're talking about different inflection points for the Eurozone versus the U.S. from a vol perspective. One to keep an eye on, like we said, German government, French government, having some issues of late over there. We're going to see French elections shaping up over the summer. Even more strange is we're seeing VIX futures pricing more juice than the VSTOXX futures are for that exact same period. That's a bit of a head scratcher, given everything we know about how these products have performed and the surprise snap elections over there in the Eurozone. That was one of the biggest vol events in VSTOXX this year. Kind of a little bit of a head scratcher that VSTOXX would be pricing in less juice for the same period than VIX. So, if there's a little bit of a discrepancy, maybe there's a trading opportunity. So just something to bear in mind as you're looking at the term structures there and maybe looking at some potential trading opportunities for next year as we keep on rolling out there into the land of VIX options right now. Is today a banger explosive day? The answer is no, listeners. If you're coming to Vol Views on Christmas week looking for banger explosive activity, dare I say it, you're probably going to be disappointed, which is why we get into the nuances on fun weeks like this, because right now, listeners, we have a whopping 320,000 contracts on the tape. Dare I say it, that ain't too bad for a Friday of Christmas week when everyone is off traveling and certainly not sitting at their screens. The ADV kind of reflecting where we are this time of year as well. 687, down 43,000. That also is probably a lot higher than it should be right now. It's, dare I say it, artificially elevated from that little spike, little tizzy we got from Powell and Company a week and change ago out there. So interesting stuff to be found. What's interesting out there from an open size position perspective out here in VIX land? Let's find out, listeners. By the way, right now in our final VIX top 10 indicator for the year, how are we hanging out to end the year, listeners? We are hanging out back to a, dare I say it, a more normal structure out here in the top 10. Only 2 puts to be found in the top 10, listeners, and 8 calls. So that's kind of what we've come to expect. That's why those weeks not too long ago when we were seeing 50-50 and even seeing it swing the other way, 8 puts over 2 calls, they were so aberrant, so crazy, so wild and worthy of note. Right now, back to a more usual structure out there in VIX land. Cost you 171,000 contracts to break into the top 10 right now. That gets you to our old pal, the Jan 21. So if the 20s aren't doing it for you, listeners, allow me to present the 21s coming in at number 10. Number 9, 173,000 of the Jan 40s. So number 9, we're already right back to the fun. The 40s, listeners, 173,000. Now, if you've been listening to the show for a while, those are usually part of verticals or ratios, all kinds of spreads. So folks aren't really coming out and just straight buying the 40s, but still the 40s coming in at number 9. Number 8, if the Jan 40s aren't doing it for you, allow me to present number 8. April 42 halves, 175,000 of those bad boys, also part of that fun ratio spread out there. Number 7, $1.83 of the June 42 halves. So again, April not long enough for you. Allow me to present the June number 7. Number 6, 203,000 of the Jan 22s. Number 5, our first of 2 puts in our top 10 this week, 222,000 of the Jan 15 puts. Number 4, 236,000 of the Jan 17 puts. Number 3, rest of it all calls all the time, listeners, 241,000 of the Jan 20s. So there's our friend, the 20s, all the way up at number 3. Number 2, 281,000 of the Jan 50s, 5-0s, and the big dog out there right now in VIX land, 286,000. That's actually pretty light, but again, we are at that time of year, listeners. 286,000 of the Jan 30s, 3-0s out there. What's lighting up the tape, such as it is on a fairly light trading day today, listener? Like we said, 320,000 contracts on the tape. The big dog today, 41,000 of the Jan 16 puts, followed by 15,000 of the Jan 19 puts for number 2. Number 3, 14,000 of the Jan 20 calls. Number 4, 13,000 of the Jan 15 puts. And number 5, 12,000 of the Jan 23s. I'm looking quickly here to see those 16 puts and the 19 puts. Looks like they were part of a spread. 1 by 2 was 15,000 by 30,000 to start. Obviously, they've done some more of the 16 puts by now. The initial print was 280 by 76 cents, 1 by 2 for those. Now, there's size OI on both, so they could be taking some of those bad boys off, but worth noting that's kind of our big dog, such as it is today. Yesterday, similarly anemic, 321,000 contracts on the tape. The big dog, such as it was, 29,000 of the Jan 17 puts. Number 2, 17,000 of the Jan 18 puts. Number 3, 15,000 of the Jan 20s. So got some calls sneaking in there. Number 4, 14K of the Feb 28s. And number 5, 14,000 as well of the Feb 40s, 4-0s. Wednesday, a much needed market holiday. Merry Christmas to everyone out there who celebrates it. Tuesday, 302,000 contracts on the tape. The big dog, 22K of the D's 15 puts. Followed by number 2, 17,000 of the Jan 15 puts. So a lot of 15 put action on Tuesday. 16,000 for number 3 of the Jan 16 puts. Number 4, 14K Jan 16 half puts, and 13,000 for number 5 of the Jan 16 half calls. Monday, surprisingly, the quote-unquote banger day of the week at only 414,000 contracts. The big dog, 33,000 of the March 20s, 2-0s. Followed by number 2, 31, almost 32,000 of the Jan 14 puts. Number 3, 30, almost 31,000 of the Jan 15 puts. Number 4, 19,000 of the Jan 21s. And number 5, on the most active day, at least so far this week, Monday, about 19,000 of the March 40s going up. Looks like we had a bit of a 20-40 vertical going up out there as well. Let's get out there into the land of the VIX ETPs quickly, listeners. Then we'll get into our final crystal ball for the year, which is just wild to say. SVIX, our inverse vol friend, was looking at about 24.85, puts it up about 0.6 of a point. As we're coming into the tail end of the show now, we're seeing SVIX ticking up a wee bit, up about 1.3 points to about a 26.15 right now. So getting a little bit frothy. That puts us up 1.9 points actually now on the week there, which is kind of interesting. Like we're continuing our trend of vol coming in, which I kind of pointed out at the start of the show at about a 17.25. In VIX cash land, we'll see where we end the show on the crystal ball in a little bit. SVIX, as you would expect, looking kind of anemic. There were only 6,500 contracts on the tape at the start of the show. That's up to about 8,200 right now, which is looking good given the ADV is only 6,300. So actually managing to beat its ADV today, which is interesting. And that ADV also finally moving in the right direction, back up 1,300 after they have come for SVIX volume, I should say, really. Just throughout most of this year, no one's really wanted to touch SVIX options for whatever reason. So good to see that ADV moving in the right direction. UVIX was at a 340 when we kicked off. The show puts it down about 0.75 of a point. It's at about 3.25 as we're coming into the end of the show. So that puts it down about 0.85 on the week. We were seeing about 51,000 contracts on the tape. That's up to about 60 right now, which is north of its ADV of 40K. So seeing a little bit of action. UVXY, everybody's favorite. I know the UVXY Defense Force is out there in earnest out there. You wish we did the whole show about all things UVXY. Alas, not to be, listeners. We're at 21.20 when we kicked off the show. Again, speaking to how much vol has come off, we are now at about a 20 even. So we were down about 1.4 points, add another 1.2 to that, listeners. So we're down about 2.6 points from where we were this time a week ago. So vol coming in pretty decidedly during the course of the show here. 139,000 contracts on the tape. So UVXY putting up some, dare I say it, old school numbers right now, north of 100K. That ADV only 71,000. So that is actually a pretty impressive volume level for all things UVXY. Not to be outdone, VXX also falling out of bed right now. Was at a 46.40 when we kicked off the show. That was down 2.5 points. Giving up almost exactly another 2 points, 44.5 right now. So that puts it down about pretty much almost 4.5 points, 4.4 points from where it was. So a lot of vol coming crashing back to earth right here in the tail end of the show. 34,000 contracts on the tape right now. The ADV 31,000, up about 2,000. Steve, I know you're not the biggest vol ETP fan, which is why I kind of breezed through most of that. But anything at all catching your eye in the world of the vol ETPs, either right now or throughout this mad vol year, sir?
Well, as soon as you say that the vols are sort of normal in a week, any product that has relatively normal vols in a week that shouldn't, that's an attention grabber. And again, I'm not a big fan of them for reasons of, I don't like to buy other people's decay. I'd rather manage it myself. But I think, the fact that people are paying attention to these to volatility, that we're seeing good activity in these names and not overly crazy speculation in one direction or another, I think is pretty helpful. So I think in general, they do serve a purpose. They do make it relatively easy and tradable, easy to trade volatility in a good package. But again, my standard, my standard caveat holds in that, they're meant as daily trading items, not necessarily as investments. And I think that, if people approach them properly, then that's probably a good way to go.
Well, speaking of things that aren't easy, it is time for the crystal ball, listeners.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. As we're coming into the end of the show, like we said, this sell-off kind of mitigating a little bit. S&P off about 1.25% right now. NASDAQ off about 1.6%. And the Dow off about 0.87% right now. So again, coming off the teeth of the sell-off earlier. And obviously, vol coming crashing back to earth. VIX cash now breaking through a 16 handle, 1681. That puts it within sniffing distance of where VSTOXX closed at a 16.27. So interesting, again, just to see how, if we didn't really see the dire move some people were looking for out of the market today, that this vol had to kind of come crashing back to earth. And that is exactly what we're seeing right now. Looking at our levels right now, the closest, by the way, last week on the show was myself. It was our buddy, Mr. Rich Excel from the Derivatives Trading Academy over there at the University of Illinois, aka Hogwarts for derivatives traders, as well as our buddy, the Meatball over there. And it looks like Rich was the closest in VIX land at a 17.16. So he's probably pretty angry. He's probably listening right now and saying, man, if we had just done the crystal ball a little bit earlier in the show, he would have been right on the money. Welcome to the world of the crystal ball, Rich. You are winning until you lose at the end of the show. I've been there many times over the last decade plus, and probably will be so again. I was at a 1578. So I was feeling less vol. I was almost exactly a point away. So no joy for me. The Meatball was feeling his palindromic nonsense at 1441 to the dark side. So no joy for any of us on the VIX side. What about VSTOXX listeners? At a 1627, we were a little bit closer on that front. I was coming in the closest at a 16.56, still about almost 0.3 away. So not within our margin of victory, but respectable, I think, all things considered. Meatball was at a 1551, no joy for him, and Rich was at a 1766. So we were all over the place. No winners this week, Rich, which means you, as our guest, get the dubious honor of going first, Steve. What are you feeling for VIX and or VSTOXX this time next week, sir?
This is a tough week because literally anything can go on because we have we in the old days we used sheets. You use one day less of a sheet because we have the holiday next week too. So I'm going to say they're both at 16.5. I know that's kind of, basically right where we are now, but I think that, that sort of implies that we're in the same general vicinity. I think it'll take a day or two. I'm hoping it's not like 2022 where the high for the year was reached on January 2nd. That would make my prediction quite wrong, but I think we sort of muddle along through next week because the holiday's on a Wednesday. So I'll muddle it from here.
Yeah, we do have a bit of a weird one coming up next week. You're right. 16.5 across the board. So that premium goes away for VSTOXX, which is kind of interesting. Yeah, it is. I mean, it's always a little bit of a crapshoot on the crystal ball, listeners. Next week, probably more than normal, just because there are so many other extenuating factors going on next week. We are kicking off the new year with only a couple of days under our belt by the time the show rolls around. Like we said, we come into the end of this show, we're a little bit shy of the 17 handle in VIX, and of course, a little bit north of the 16 handle in VSTOXX. And I've said it before on the show, we do see January kind of come roaring out of the gate like a lion the last few years. It's kind of been overshadowed by other crazy events, let's just say. But, we did see back in January of 2020, we did assassinate that Iranian general on the tarmac the first week of January. Obviously, we all know what happened January 6th of 2021. There have been some interesting developments and or surprises and or shocks to the system very early in January. So people sometimes tend to sleep on that of late, but something just to bear in mind. I'm not saying something's going to pop off in the last 3 days of the week next week, but just something to bear in mind. January is not always the kind of sleepy place for vol that some people might expect, especially early in the year. So with that in mind, I'm going to say we're pretty close to where we are right now. We have some catalyst that keeps us around this level here, maybe a little bit north as we are this time a week from now. So I'm going to say 17 and a quarter in VIX, and VSTOXX, because it's doing a little bit of its own thing, is going to say 17.55. So there you go, listeners. That is your market for next week. VIX 16 and a half on the downside, 17 and a quarter on the upside, and VSTOXX 16 and a half and a 17.55 for me. All right, that is going to do it for us. I'm looking here at some of our live listener prognostications. We're all over the place, which is what makes a fun market out here. Where's the queen? She's always pretty prescient. 16.40 for the queen. So I wish I could say you were correct, queen, but obviously we know the right answer is 17 and a quarter. 15.80 nickel, well, 16, all over the place. OGs 12.80, Z3 15, all over the place this week. That's kind of interesting. That's why I love it. That's what makes a market, listener. So get your prognostications in. If you're not listening live, you're not part of the pro, guess what? You can still play along. Just reach out to us either on social media or questions@theoptioninsider.com. Today, the day the show is recorded and drops, listeners. If you have a prognostication for where VIX will be this time next week, you want to throw VSTOXX in there as well, you can get 2 bites at the apple. Then guess what? If you're within a tenth of a point, you too can win fabulous prizes. It's a fun game at the end of the day. And Mr. Steve, if folks want to check out what you folks have cooking in the land of VSTOXX, or maybe a little bit of election fun, or just binary event fun, where should they go? What should they do, sir?
Okay, well, there's a lot to go on here. The stuff, if you want to see what I do on a daily basis, go to IBKR Campus, which is our educational site, and then to the Traders Insight section. That's where you could find what I do. The Forecast Trader, just basically forecasttrader.interactivebrokers.com. That's our ForecastX marketplace, where right now, currently, I happen to be staring at weekly jobless claims and things of that nature. And those would be the main places. You could also find me on X. You could find me on LinkedIn. All the usual suspects there.
And if you want to check out what Steve is talking about, go to the mothership, the source, Eurex.com/VSTOXX, listeners, to learn more, all that historical data, all the info you want to know about the methodology and everything else. Eurex.com/VSTOXX. And of course, while you're checking things out online, maybe you want to sling a little bit of vol. Maybe you want to get, a rebate to do it. Definitely not the worst thing. Check out our friends over there at public.com/VV, the place to go to kick the tires and light the fires. We definitely thank them for being such big supporters of the network throughout the year, not just on Vol Views, but on, of course, Boot Camp. They popped up on the option block. They were all over the place. They really loved engaging with you folks here in 2024. So send them a thank you. Get on over to literally the easiest landing page I've ever had to promote. Public.com/VV is the place to go to learn more. Hey, maybe while you're there, you get paid a rebate to sling a little vol. Not the worst thing. Public.com/VV. That's going to do it for us for the mad, insane year that was 2024 on Vol Views. I want to thank all of you out there who've taken the time to listen, download, stream, join us live, make a comment online, whatever you've done to engage with the show this year. We appreciate you all. Once again, 2024, the biggest year in the history of the show. That continues year in, year out. We literally couldn't do that stuff without you folks. So thanks to all of you out there for continuing to love Vol Views and all the shows that we do. But we know there's always that hardcore Vol Views audience out there who just takes it to another level. We love all you folks out there. So keep it up. And I want to thank all of you for doing just that. We will be back next week on Vol Views to look back in depth at the insane year from a vol perspective, the highs, the lows, the trades, the trends, the things that stood out, the things that resonated to us from the mad year of vol that was 2024. And there was a lot. So stay tuned for that next week. Should be a banger. We'll also pay off our wild VIX prediction game from a year ago. See if we had any winners. Man, a lot of you played this year. Our producers are going to love crunching all that data. So stay tuned for that. Let's see if anybody won some mega prizes this year. Should be a fun one. And a whole bunch more. So join us next week for Vol Views. And of course, on Monday for the option block and all that other fun. Have a great end of your trading year. We'll see you back here in the new year with another episode of Volatility Views. Stay safe out there, everybody.
The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European volatility benchmark, at www.eurex.com/VSTOXX. If you're paying $0 to trade options, you're paying too much. That's because at public.com, you can go a step further and earn rebates on every single contract traded. No commissions, no per contract fees. That's table stakes. When you place an options trade at public.com, you not only don't pay, you earn a rebate. And those rebates can add up fast. Public is the only options trading platform where you can earn rebates. You literally won't find a better deal. So, switch to Public and start getting rebates on every single contract traded. Or stay with your current options trading platform and leave money on the table. The choice is yours. Public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.